It's a busy trading day. Joining me now is Charlie Lewis with Trading Advantage. Happy to have you back on the show.
Thank you very much.
So today it's a Jobs Friday. So what's your anticipation as traders are trading the number and then taking off for the weekend?
Absolutely. We've had, during the course of this week, we've had a series of numbers, very important. We've had developments in Europe regarding the Brexit. We've had some announcements. Of course, the jobs report was one of the pivotal moments of the entire week. We've seen the volatility that was expressed shortly after the market came in. So we are looking, we've got such a busy calendar that there's a number of events that we can take into consideration.
Absolutely. And plus on Monday, the bond market is closed.
Absolutely.
So a lot
Yes,
has to
Columbus
happen
Day.
today.
Sure. We're trying to compress a lot of the expectations that are going on from here on out through to the election, which is going to be the, I believe it's the 8th of November?
Yes,
which is
that
going
is
to be
correct.
extremely important, of course. We could have a surprise outcome, similar to the one that we had as a surprise outcome on the Brexit. Nobody was really expecting the Brexit. And then all of a sudden, we woke up on that Monday morning and we were all quite alarmed.
Did we ever? And plus this weekend we have the debate happening on Sunday, so
Yes.
traders do have a lot to take into consideration. Let's talk about Brexit. We are finally starting to feel the effects of this.
Very much so.
What are you seeing in the market?
I think that politically some of the lines are being drawn in the sand, and the market is reflecting all of the new events as the news is breaking. We've seen a new break in the British pound down to new lows, 30-year lows, by the way. Lows not seen since 1985, which is quite an important development. At the same time, I'll note that all of the other currencies are declining as well, meaning that because interest rates are starting to increase here in the United States as a result of the high employment, a variety of other sort of relatively positive indicators that we're getting from the US economy, interest rates are rising here in the United States, making dollar-denominated assets even more appealing, and therefore currencies in general have seen a decline over the last few days.
A lot of people are watching this currency market as well for travel indications.
Oh,
so
for sure.
going to
For
the
sure.
UK right now,
Yes,
great
very
time.
cheap, very cheap in the UK and in Europe, of course, and in Japan as well, because the Japanese yen is down 5% from its highs. So there are I think that markets are reacting as they normally do to events as they are announced, and we have a whole slew of them. We've just gone through a couple of them recently with the employment report, and for this coming week, of course, we're going to have a number of them as well.
What's your biggest trade as you go into the weekend?
I think for the very next week, I think that we are going to be looking at support in the British pound, specifically at the 125 area initially, and then of course we have a very important benchmark at the $1.20, which is a number that we haven't seen basically since 1983. Wow. So we're making history here.
Thank you for coming on the show.
My pleasure.